I think we stopped with Nahelia. Did you guys work together?
He set me up.
Oh, you set you up. Okay. 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 Oh, and we need the. Here we go. Once again.
He asked if we worked together.
Okay.
So any market, time frame, would you buy, sell? Any candlestick signals, would you buy, sell, and why?
I can't remember where I was back here.
Yeah, it was a while ago.
No, go ahead.
Well, we started looking at Lilly,
Okay.
and we discovered that we wouldn't trade it.
Okay.
We started with the daily
And what's the symbol on that again?
LLY,
LLY. Okay.
and we decided not to do anything for two reasons. It's coming into support or resistance level there at 57 and 57 and a quarter. And it's
Okay. So
also
okay.
the whole number, the whole 57. So
Mm-hmm.
although it is in an uptrend because it's approaching that resistance area and the 57 whole number, we wouldn't trade it.
Would you be buying or selling this?
No, it wouldn't
Right.
be. I just don't think it's a candidate for shorting.
Right. And the reason for that?
It's in an uptrend and
Yeah.
there's no turning signals.
Right. I agree with that. Even if you didn't use a not moving average trend to see that the market was over the 23-day moving average, all you have to do, remember when we talked about trend, we said there are various ways. Looking at trend, I have three ways. One of them is just looking at the highs and the lows. And it doesn't take a genius to see this is a bull channel.
Yeah.
And so, one, the trend is very strongly entrenched. Secondly, no bearish reversal signals. Okay. One of the things I look at is an oscillator, moving average oscillator, and that compares the close to the 5-day moving average. It's a nice way of gauging if the market is overbought or oversold short term. So the market's a little overextended, and it's getting to a level that was overextended. See, each time the market got here, it became vulnerable. Okay, over here. Now, keep in mind, very important aspect. Just because the market's overbought, and what I say about overbought is true for oversold, just because the market's overbought doesn't mean it can't go higher. In fact, there are traders out there who like buying overbought markets. The trend is really strong. The overbought is nothing more than one of the tools that you should be looking at, and the only time I'd take the overbought reading into account is if we get some sort of candlestick signal that lets us know that the market, the bulls, are losing momentum. So for example, okay, is the market overextended here? Okay. We're looking at the oscillator, based on the oscillator. Again, you might have your own ways of gauging overbought or oversold. Yes, it's overextended. Are there any signs that's saying the market's slowing down out of the candles? Same question. Okay, is the market overbought here? Is it still overbought? Still fairly overbought. Any signs the market's losing momentum? The doji.
Yeah, doji.
All right. So I would be nervous at that juncture there. I don't think it would be enough to pull the trigger on the short side, but I certainly would be taking profits there. So case in point, I would still be long here. The market, if you are long, it's approaching resistance. So it's one of those markets, and it's going to happen. It's too strong to buy. It's moved up too far, too fast. It's vulnerable, but no signs the bulls are losing steam. But I'd be afraid to buy it because it's overextended and it's near resistance, but it's just too strong to sell. So, you sit on your hands.
Yeah. And you look at the intraday, and there's just not enough range to get involved with it.
On an intraday perspective, the way, let's see how I'd be. Just get rid of this moving average here. Oops. Okay. On an intraday perspective, what I would be looking at normally, I'm not real big on angled trend lines, but when you have something like this that's so classic, classic bull channel. And the way I'd be looking at this, if it breaks under the bottom end of the bull channel, it's not really a bearish signal, but it could be first sign the market could be rolling over, cup, potential cup or rolling over. But yeah, there's really not much to do. I'd be leaning towards, because it's a bull channel, I'd be leaning towards going long on the bottom end of the channel and liquidating longs at the top end of the channel. Why wouldn't I be selling short? Why is selling short at the top end of the channel, looking to cover at the bottom end of the channel, a little riskier than going long at the bottom end of the channel and liquidating longs at the top end? The trend, because of the trend. If some traders, that's why it depends on your trading style. If you're willing to take a little bit more risk and you want to sell short, at the top end of the trend, and cover on the bottom end of the train, the channel, that's fine, but realize you really are going against the tide. Okay, next one. Okay, Ann. So yeah, I wouldn't be doing anything here either. Yeah. If anything, I'd probably be buying I would be buying the bottom end of the channel. What I'd probably be looking at, just for, just buying maybe down here, but not much really. I'd be forcing the trade. We don't want to do that. Okay.
We were looking at Sears Holding, SHLD,
Okay. Right.
and shorting it.
Okay, and we're looking at daily, what time frame?
We looked at the daily,
Mhm.
and then we looked at the 1 year.
Okay, and I guess the reason we went back a year was to get a support area, right? Okay, so we have the daily here
With the downtrend.
with the downtrend. Okay, the market is moving down. And shorting, what's your stop out level? What reason would you be selling here?
Well, we looked at the intraday chart,
Okay, sure, what time frame? And that's what you should do.
the 30-minute.
That's what I like looking at. 30 or 60, that's what I usually will look into. Okay. All right, and what do you see? Okay. And why would you be?
Well, we were looking at support. Let's see.
Okay, so this is a 30-minute. And I happen to agree with the trade. I just want to hear what your reason is. Is that true?
Earlier in the day, we were looking at it at 134. Now it's down about
Okay. All right, so over here.
132.50.
All right, so what would make you, so earlier in the day, we're over here. Okay. So what makes you, we're over here. Why would you sell?
Well, the stock is in a downtrend.
Right, longer, the daily chart shows a downtrend.
And we thought there was resistance at 140.
Okay,
There's probably-
140.
There's probably resistance lower than that.
And where'd you get the resistance at 140?
From the daily chart.
Daily chart, okay. All right, so you're looking up here. All right, I would not disagree with the 140. Okay, and that I think is very heavy resistance. Okay, so if you sold it this morning, okay, you sell at 134, whatever. You're risking to 140 because that's where you're looking. When you talk about resistance, we're talking about a potential target. I'm sorry, that's your stop out level, 140. Okay, so you're risking $6, and if you're risking $6, you have to be looking for a downside of at least $12 before even thinking about the trade. Where would you have a support level? Where would you look for? If you sold it at 134, we have a stop out level. You say 140. Where's your price target? Where's your price target, and why?
Well, and I guess it was from the
Daily chart.
daily chart. We
Okay.
picked up a 120.
Okay, a 120. Okay, going back a year.
Yes.
Okay, and what did you use? You mentioned the intraday chart. What made you decide to go to the intraday chart?
to see what the activity right now
Okay,
was.
so let's look at the activity on the intraday. And you have all the techniques right. You're looking at the trend, you're looking at a different time frame, you're looking at support and resistance. So let's just focus a little bit more on that. On the daily chart, certainly resistance 140. But the intraday, I think, gives us some really interesting things. Okay, what do we have at the highs today so far? Okay, this is today over here. You should really be able to see this.
We have the window at 128.
We have the window, and what else? What do we have today? This is, you have to be familiar with the basics of the candles. And what do you see at the high today? A bearish engulfing pattern. It's almost an evening star would be if this black candle got more into the white candle, but you all should be able to see the bearish engulfing pattern. If you don't, review the basics. The black candle wrapping around the white candle, this is actually, it would have been a great trade. Why? You have the bearish engulfing pattern, and what did you mention also, Ann? Or maybe you didn't, or maybe it was somebody else.
That long tail significant.
Yeah, I would look at that as probably a support area, but okay, this is a huge window. Okay? This whole thing is a window, right? Where's resistance within a window? The whole window. The whole window is resistance. Where is the last gasp of resistance? In other words, the whole window is resistance. If we had to pick a more important resistance area with a falling window, where would that be? The top of the window. And what happened right at the top of the window? A bearish engulfing pattern. If you are not on this trade from the short side, there's something wrong with your analysis. Even, this is one of those, heaven drops a fig sort of things. The trend is down on the daily chart, good analysis there. So you're looking to sell on rallies. You go to an intraday chart to see if you're seeing something different, and certainly it jumped out at us with the top of the window. See, the challenge would be, I'd be very nervous selling here or here or here. Yes, sometimes a 50% retracement in the window works, but it's kind of a coin flip. But when you get to the top of the window with a bearish engulfing pattern, you should be all over this, as long as the risk-reward is good. And even if you're looking for a target down here, I think that's a fine risk-reward. Okay.
The big long candle.
Uh-huh.
With the bullet.
The long lower shadow? Uh-huh.
That threw me off.
Okay. And in what sense? What thought you?
I thought that looked to me very bullish, but I didn't see the bearish engulfing.
Right, and you're right. If you have a long lower shadow like this, it is a positive as far as that one session. But once again, we're all detectives in the market, and every candle line or every price point is going to give us new information. So whereas the information here said one thing, the next 60-minute period gives us this is old information now. Once you get the 60-minute period, this is older. This is information. The most recent information is the current action. And now we're understanding the psychology of market. And as soon as you see this, I think this is a great short sale. Where would you have a stop? Okay, we have the window at the top of the window at 134. Okay. Give me a number. Where would you have a stop? What's that?
Okay, shadow.
Okay, would it be the top of the window? Top of the shadow, yes. Think about this. I mean, wouldn't it be upsetting if you got stopped out at like 134.05 and this high here was what, 134, whatever this is? Yeah, 134.22. So yes, classically we could say if the market closes above the top of the window, you should be out. But we have something like this, real world, you'd want that to take out that high. So with this, I'd be comfortable being short. I'd be nervous about being short here because it would kind of support between support and resistance. But if you saw that on the opening, that would have been. I think that's a great trade. If the market does close under that long lower shadow, where would the next support area be? Where's that? Okay, so under 130, let's round it off. Under 130.50, where would the next potential support area be? Give me a number. 129, and why? The window, yeah, it's the whole window, right. So What I'd have here is S1 for first support, and then a mega zone here for S2.
Steve, that might be a mistrend on that, the long tail.
On the long shadow, it very well could be, you know, see? You know what happens. Actually, this is CQG, and they're actually, they're pretty good, but, you know, if they get bad data from the floor, you know, there's really not much they could do about that. Yeah. Yeah, it could be a bad tick. It could be a bad tick. This is a 5-minute. Yeah, that's probably a bad tick. So with that in mind, we'd have to look. Let me go to 15 minutes. Okay, so assuming this is a bad tick, I tell you, I would look for first potentials. What I probably would do is look for some potential support right around here. Minor stuff, but you have 3 sessions right around the same lows, so that'd be my first support. I would call that minor support. Next support, also I'd consider minor as the middle of the white real body. And by the way, I mentioned that the middle of the white real body doesn't, on a scale from 1 to 10, I would rate it like a 3. However, if the market tests it, like it did here, see the market is near the middle of the white real body, it's testing it, and then it tested. This to me says, okay, this has been proved that the middle of the white real body should be a support area, and so I place more confidence on it. So this would be my, assuming there's a bad tick, this would be my S1, S2, and S3. Was there a question?
No, I answered my own question.
Okay, that's good. He answered his own question. Okay, Jim? Oh, okay.
I'm looking at Apple 60-minute, 10-day chart. It's around its 52-week highs.
Okay. What chart? What time frame?
60-minute.
16-minute. Okay. Okay.
Looks like pretty good support around between 50 and 49. The window around 49.
Okay. So go through the analysis. How would you trade this, and why?
Well, it's making new 52-week highs. You got good support at between 50 and 49.
Okay. So what we do is just make sure we'll go to a daily chart, just to make sure it's not near major support or resistance, and you know, as you mentioned, it's making new highs. Okay. Okay. We're back on the 60-minute. Okay.
Immediate support would be 50, 25.
Okay. And I guess the reason you got for that was
Right.
hopefully, right?
And then you also have S2 with that window right around 49.
Yeah, and I'd probably even make a little shorter support area like over here.
Right.
Because we had quite a few sessions there. So it's actually a nice band here. And then, right, the window, the whole window would be support.
And it's kind of, it looks like it's stair-stepping pretty well. So if we're really aggressive, I don't know if it might be a good entry there, or might wait for it to drop back down to support. But then
Okay.
I'd look for half of the recent run, which would be 53.50, I think.
Okay. All right, now, if you're buying it here, I mean, I agree with the concept. The trend is obviously up. We're broken above a trading range here. What's the problem with buying it right here? You know, forgetting about the candlestick signals, even if this was a bar chart. What's been going on for the last 3 out of 4 sessions? Where's the market stalling?
Right there.
Yeah, 51. So, depending on your trading style, I would rather buy on strength. Let the market have an hourly close above 51.
51.50.
51, whatever it
Yeah.
is. Oh,
What
actually,
Ash said.
this level here, 51.
That was
And-
Ash's recommendation.
Okay. So if it closed above 51, I'd be going long, okay, on that. Depending on, and now the challenge is, where do you get, before I say I'd be going long, obviously you have to have a target. And the challenge is, you know, where do you get a target when you have a market like this? So one of the things I will do to get a potential target in a market that's making new highs, you know, either forever, as it was during the good old bull market days, you know, when you have no prior highs to key off of resistance, what I will do is just connect the most recent highs, okay, and you can have that as a potential target. And you can see how the market pulls back from there. It's bullish, but see, the classic resistance line in Western Technicals is, downward sloping. Whoops. Like that. But you could also have an upward sloping resistance line, like that, and that's a good area to key off of. So then the challenge becomes, if you're buying it here, it has to be for very small, for half a buck, and that means you have to be willing, it has to be, the risk might be, 10 or 20 cents, something like that. Ed, or did you guys work together?
Yeah, we've worked.
Great, okay, good. Okay. Any questions on any of the charts that we did? Are you finding where you're making mistakes or things that you may not have seen? Because the idea is that I'm showing it how I would analyze it and how I would see it, and think about the risk